Hello, and back with you with another video recap. You're going to start seeing these recaps coming to more and more of an end as the next few weeks go by. Okay. The new website is live. We're ready to launch it in a few days. A lot of you who are currently members with us are going to have either your own private access to it, or depending on your membership level with us, you're going to actually um, be able to get into the programs for a small fee just to secure your commitment to wanting to study the material still. Um, and I'm going to show you that right now. Super excited for what we got going on. Here you go. So this is the website, omnificentdev.ca. Feel free to go check it out. We have a really cool, inspiring branding video, a little bit about my background and why I started this company. So a nice profile view on who it is I am, and maybe why you should take note if you're somebody who's looking for a change in their financial game and still want to keep your cool career or job. Okay. Um, super cool. So get to go and check that out. I'm not going to spend too much time talking about it here. Just click get started. I've got a nice 2-hour webinar for you, educating as much as I possibly can. This is basically the entirety of my financial knowledge put into a small consolidated 2-hour fashion for you to learn from, and then if you want to take it further, then you have you have the ability to do that, different courses that we got going and whatnot. Okay, so let's just talk about today's trade on E and Z. Just want to talk about the importance of waiting for key levels, and I feel like when the markets are not just hot and they're either going through a chop zone or they're not necessarily just uptrending, they're just kind of doing not much, it gets infinitely more difficult for people who are used to chasing to have any sort of profitable result. Because where you usually chase, you're going to get crushed. And the later you're to the game, for sure you're going to get crushed. So I'm going to reiterate, the dip buys are working. They're working so well, but the problem is that most people don't know how to buy dips very well. Myself included, maybe a while back. I've gotten way better at it now. And the reason that I think it's hard to buy dips, specifically even for me and my personality, is I'm impatient, right? I like momentum. I like in out, make my money, walk away and live my life. So then the idea of buying dips, because it requires you to wait for those key levels, it gets hard, right? It gets hard and you wonder and you get spooked out and maybe you think the stock is turning before your key level, and it's hard to not trust the process, okay? So I want to talk about ENZ and sort of what happened, how I made the trade, and how you can learn from this and repeat that same thing in the future as the same pattern repeats itself. Okay. So let's take a look at ENZ today. This is obviously no price action. Okay, you see before the market closed, this is my Interactive Brokers account. No price action, very light volume. And then something specific happened here. Now, I'm in Mountain Standard Time, so when you look at these timelines here, please put that into perspective. But look at here. At 2:05, which is 4:05 Eastern Time, so 5 minutes after the market closes, they report their second quarter fiscal results, and company provides leadership and corporate updates. Turns out the CEO is stepping down, some more strategic people are getting involved, and the stock spikes. And it's kind of like one of those mic drop moments, I think, for the CEO. He's gotten the company turned around, and he's able to step down into a beautiful, better part of what looks like 60-70% spike. Okay. And it was a positive earnings report. So if you go through the earnings report, you'll see that it was a good outcome. And this thing was spiking. And how this came up was on my stocks to trade scanner. I'm going to show you that, what I'm running for these scans. Let me bring this over here. You'll see that. So I'm looking for after hours percent change greater than 15% with a last price above a penny and below $100, and I want greater than 200,000 shares of volume. And typically, why I bring the volume down on these after hours plays is that the spikes are so fast and they happen on such light volume that I want to be aware of them, because typically that's how I can reactively go and find the news and find, okay, why is this thing running? So in this case, this thing had news and had every right to run. So it caught my attention. Now, oftentimes you find these after-hour spikers will run, but there is no catalyst. There's absolutely no reason for it. It's just a random short squeeze or random, financial institutions buying up the shares, and the stock goes parabolic. I like to focus less on those unless the market's hot, and focus more on things that actually have a catalyst. So as it turns out, it came up on my screener here. As you can see now, after hours, it's 54%. And usually what I do in that instance is I like typically shorting into these massive spikes, especially when they go parabolic, as ENZ did. So as the case is, I'll come in here into my watch list and I just type in ENZ. Now you can see it's here already, but just very simple. When I see it on my percent gainer scan popping up, first thing I do is type in ENZ, and it shows up right there. Obviously now it's up here because it's already in my watch list now. And I like to look for two things. First of all, if there's shortable shares, easily shortable shares at Interactive Brokers. And second of all, what the fee rate is. Now, for those of you that don't understand really how the fee rate works, now don't quote me exactly on this because there's some little differences that can apply. But how the fee rate typically works, let's say we have an annual fee rate of, let's take something excessive here. Let's look at Rito, 97%. So what that would entail is if I take a $1,000 position on Rito short, and I will be charged 97% annual fee on that, which means what? Which means that the fee on it annually is $970. Divide that across 200 and somewhat 53, 52 trading days, and that turns out to a daily rate of $3.83. Okay? So when I have a nice cheap the fee rate on ENZ, I'm thinking, great, I have a low fee rate, I have shortable shares, and I'm looking at a stock that's spiking. It's going parabolic. So then, as most of you know, I want the second pullback on the short. They seem to be working really good as of late. The first pullback seems to just be a bit of a pseudo pullback for the next rip. It's really the second pullback where I get the confirmation to get in short. Now in this case, I did not short, but I'm just trying to show you my process in taking up a short position. Now a lot of you might be asking, hey, why are you taking a short position against positive earnings? Well, the reason for that is typically when there's good earnings, if you go and actually research into the history of the SEC filings, the company has the right to dilute shares. There's insiders that can sell into that, and why wouldn't you? You worked hard as an insider, the company now posts earnings, you probably want to take some stock profits. Now, on top of that, the CEO getting out, in the back of my mind, I'm thinking that, okay, you know what, there might be some shares liquidated here, and as much as the news is positive, it still doesn't undermine the downside that could exist after the parabolic move. Okay? Again, none of this is factual information for ENZ. I'm just trying to get you to understand my mindset shorting into these pops. Okay? Anyway, so what happened here is I was just watching this because I'm really just trying to focus on my dip buys right now. Right now, I think that both going short and both going long is such a risky strategy because some of these stocks are just running and some of them are not running. So it's a bit of a 50-50 setup. So I'm not really comfortable taking shorts as I'm explaining it to you, but I'm telling you that this has been a pattern that's been repeating itself. So you can be on watch for it, and if you see it, then maybe you'd be more comfortable shorting than I am right now. Okay, so I've been focusing on dip buys, and with those dip buys, the conversation always becomes, where is the key level? So looking at ENZ, we have a few key levels to look at. The obvious one is the first pullback here in the 4s. The second is the pullback here in the 470s. So 4 and 470 are absolutely two key levels, which is no surprise when we punch through it, the stock goes up. Of course, 5 is another key level that's formed in hindsight. And now, when the stock is on the backside, how did I know to get in here? Right? Which is basically calling the bottom of the stock before the move up. Right? This is what so many people want to learn and get good at. So this is nothing more than basic technical analysis applied to fundamentals. Okay, fundamentally, we have a stock that is on a dip, on earnings contract, or I guess on earnings winner, and it's bouncing off a key level. We all know that the VWAP is a key level. right? VWAP is where the share price should be traded based on the current volume of shares traded. Okay, so typically what happens with these stocks as of late is the first resistance, okay, the first point of resistance that you go through typically is not where they bounce anymore. In the summertime, if you remember, oftentimes these stocks would run, pull back to the first resistance, and then they would rip again. Now it seems to be more so they're bouncing off the second or third level of resistance, of previous resistance I should say, and then they're bouncing back. So what I saw was that, okay, obviously this is my first line of resistance, and there you can see there's a little bit of a spike right here with this little wick that was formed, but ultimately my thesis was they haven't been working too well, and on top of that it's not pulling back too much. I want to pull back a lot more, so I didn't use this. I used this line right here where previous resistance became support, and I wanted to see if this can bounce from there. Now that wasn't the only reason that I went into it at 436, okay? The second reason as well is as the stock starts trading a higher price, okay, the VWAP starts coming up. And when the VWAP, which we all know often acts as a level of support where you do get bounce backs from, when that VWAP coincides with a previous level of resistance that in this specific thesis also happens to be that second line of resistance, right? It was a high odds entry on an earnings winner to get in. And my thesis was nothing more than I just want to buy the stop losses that will go through VWAP, undoubtedly. Some people are stopping out right here, and I want to be the one that's catching those stops. And my goal was actually just to hold this into tomorrow morning being 4 a.m., and sell into the spike, because this news will probably hit overnight into overnight traders, and I wouldn't be surprised if there would have been a spike tomorrow morning when you look at this. So tomorrow when you wake up, take a look at ENZ and see if you can get a spike through 556. And if that's the case, that's the thesis that I was going based on. But on the flip side, when I started seeing that, you know what, I just got my 4%, 5% in a matter of 7 minutes. I just couldn't sit through that and not take my profits. So I just took my profits and walked away. Now, granted, you might say, well, hey, you just said that you wanted to hold for the next morning and sell into the spike and all that. Yeah, absolutely, I wanted to do that. But if I have profits, profits are profits. They all add up at the end of the day. And recognizing that not one individual stock is going to make you financially rich, wealthy, whatever the word is that you're looking for, but it's the culmination of taking these good trades that's going to make you financially free. This is the habit that's required to get there. Now, does that mean that I was in the wrong to take it at was it 453 I took the profits? No, it wasn't wrong, right? I mean, I think it's a very good trade to call the bottom of the stock and then also get out into profits. Now, the stock did go up to the 470s, but neither you or me can ever guess what the top of a stock is. And the reality is I don't want the stress of holding this overnight. I made my 4%, 5%, whatever it is. You can do the exact math yourself, and I'm walking away. Okay, so I'm just trying to showcase this trade to you and get you to understand that, buying dips really requires patience for this thing to come down to the key level. If you wait and you can call a good trading thesis, like you saw me explain to you, then you have a good entry. And if that good entry goes against you, it's extremely easy to cut losses because those key levels are being broken. And what do I mean by that? If let's talk about the hypothetical where this thing comes to 436, right? And you get in, you get the little bounce back, and it continues dipping down. Well, where can you cut your losses? Well, you can basically cut your losses the moment you see weakness through this level, right? Like if it's not holding the 430s where it coincides with the stop losses of VWAP going out, at a key level, like if it's not going to hold this level and bounce back, you're on the wrong side of the trade. So just get out at 430, 425. You can cut your losses very quickly, and you don't have to hold and hope through that. But if your thesis is correct, then you would have called an absolute perfect entry on the stop. And how is this different than chasing and cutting losses? Well, where it gets difficult is if you're chasing into this, likely you're not going to get filled at the perfect resistance unless you're buying a buy stop limit type order. And you're probably going to be chasing it here in the 490s, right? And if you're chasing it in the 490s, if this thing turns against you, you're going to have to wait and see what happens at this point, right? This is likely where your risk would have been. So you're buying in the 490s, risk it off of 475. And then when 475 gets taken out, you're probably going to sell into the panic and get, I don't know, filled in the 460s, 465, 450s. So now you're taking a 30-cent per share loss just because you have to wait and see what happens at that risk. And of course, if it works out, it works out. But the problem is that when it doesn't work out, you're taking a bigger loss chasing than you are buying the dip. If you buy the dip, if that area is imbalancing because it's not falling in line with your thesis, you just get out. You don't have to wait for the next resistance line. It's just easy to get out. You're calling the literal bottom of the stock. Okay? So what are the key takeaways? The key takeaways are if you're trading after hours, you want catalysts. Okay? Don't just get in on random percent gainers. Random percent gainers in after hours are good shorts if you can locate the shares to short. Second takeaway. You want to wait for the first obvious pullback for the short. Okay, so if you're trying to take a short on something, you want a massive percent gainer after the first obvious pullback, and you want to short into that second top. This is not an obvious pullback. This is just initial profit takers getting out. This is that first red candle. Okay? Once you get that first red candle pullback and get the second pop, that's been the place where shorts have been usually working very well. Number 3, if you're going to be buying the dip, then you have to wait for the second key level. I should rephrase that. You don't have to do anything I'm telling you, but this is what I've been seeing. The second key level is working for a balance, especially when that second key level coincides with a previous area of resistance. Okay? On top of the positive catalyst, because it's probably very high odds that if you have a beautiful dip from the 5s to the mid 4s, low 4s, I guess, someone's going to buy this up behind you and bring the stock price up. And shorts are also going to cover down at this key level as they look to get out of their short position from the 5s. Okay, so there's multiple buying power down at the dips. Okay. So I wanted to leave you with that information. Like I said, this is gonna these sort of video recaps and all that. It's gonna be slowly disappearing from Facebook. We're moving over to our own website where you'll be able to log in with your own username, email, and password. And we're gonna have a nice community site going. Okay, and that community site is gonna be super cool because a lot of my what do you call it? A lot of my watch list, like you see right here, video lessons on how I navigate through the current market environment, my watch lists, my mentors will be working with me, all the questions and challenges that our students and our clients have will be answered in there, and we'll be offering membership rates in there with year-round discounts, and of course a private community. Okay, you're gonna be able to interact with other people that are just like you, trying to learn this game, trying to get to the other side. Okay, amongst all other types of profits that we're trying to show you how to get, and other courses that are in there. And I'm actually working on an options contract course next, which we're going to be releasing an options course, which a lot of you are going to be super excited about because a lot of you who work with us who are trading are also looking at how to invest, bigger amounts of money that you might want to do for more long-term holds. So we'll be talking all about that sort of stuff. That program's probably about 4 or 5 months away, but I'm super excited about putting that options contract together for you to learn about. And yeah, just super exciting times. Okay. So check us out, omnificentdev.ca. Click Get Started, get educated for free, grab a free course, and then go from there. And hopefully we can serve you to achieve an omnificent life. Okay, guys, take care. Ladies, take care. Whatever else you are, take care. And I shall see you in the future.